Well, Anthony Albanese, or anyone for that matter, will have an easy time remembering the unemployment rate this month. It's exactly the same as last month, 4%. Let's bring in our Sky News business editor, Ross Greenwood. Ross, the rate's the same, more jobs are being created though, and signs of pressure actually building in workplaces.
Yeah, there's no doubt about that, and you can see that when we'll take you very shortly through the various states, but even little things such as women's employment has increased. So the unemployment rate for women has dropped from 3.8 to 3.7%. For men, the unemployment rate is 4.2%. And you get a sense perhaps that maybe the reason why the unemployment rate did not drop down into the threes, even though it did fall from where it had been previously, is really partly about the floods, because there was clearly fewer hours worked in the past month as a result of floods, and people were reporting clearly, obviously not having the work that they previously had as a result of many of those communities effectively being closed down by the floods. So if we have a look here, the unemployment rate there is 4%, the same as it was. The participation rate, that's the key here. So Australia has now got a record participation rate. So in other words, people who are eligible to work, the number of them who are working, 66.4%. But as I say, the number of hours worked dropped by around 10 million during this month. And the reason for that, I think, can be pretty squarely put at the floods. But the problem of all this is that once the floods pass and the work goes on, then you're going to get more pressures in the workplace. This unemployment rate will end up with a 3 in front of it. It's almost undoubtedly. And as a result, you can see here just the trend in where unemployment has gone in Australia. And as I mentioned earlier to you, Tom, I think this is, perhaps the chart that maybe the government should be just pinning on every wall that it possibly can, because that's the one that shows you that anybody who wants a job right now and wants to earn money right now can do so.
And there's a very similar one on underemployment. So that factors in whether people want to work more hours as well, Ross. So yeah, right now that story is unambiguously a good one. What about state by state and what this says about any shortage of workers?
Yeah, so this is where I want to really show you where the pressures lie right now. Because when we go across the states, if we have a look at, say, Tasmania, the number of jobless there has fallen. In Victoria, it's 4%. The ACT is always generally the best, 3.4%. New South Wales, you can see they're 3.9%, so already has a 3. Queensland's had a big fall in its unemployment rate down to 4%. But look at Western Australia. Of course, the mining boom that's taken place there means that there is an abject shortage of workers in Western Australia. And so really many of the pressures that you saw leading into the global financial crisis, when Australia's dollar got to $1.10, when we last saw inflation, that's what you're seeing in Western Australia right now. So across the country, you're starting to see, with the shortage of workers, the pressure for wages to rise must increase. And that, of course, ends up meaning it will prompt the Reserve Bank to raise interest rates in Australia.
All right, so in terms of doing that, your prediction remains June, the caveat being the inflation data we're going to get just before that.
Yeah, that's right. And so we'll see that inflation data. The strange thing here is that the Reserve Bank, all the way along, I said we're waiting to see the wages growth data, we're waiting to see the inflation numbers, but of course has changed its tune just in the last few weeks, where now it's given the first hint that it will be raising interest rates in June. That's where all of the major bank economists believe that rates will be raised. The second part about this is even a warning that the Reserve Bank put out last week, that if it's prompted to raise interest rates too quickly and by too much, that it could have an adverse effect on our share markets and indeed our housing markets. And so that's the first sign of a warning from the Reserve Bank about that. But it would seem as though June is the time after the election campaign. Although it is independent, it could arguably move in May, but you just get a little sense that maybe it's going to be a little bit more cautious and wait until the election period has passed.
Yeah, maybe. I still think it needs to go. It needs to go. Ross,
the truth.
Thank you. Great analysis of what's happening there in terms of a whole lot of different areas of the economy.